Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Attila Pink, and in today's video, I'm going to talk about that the market is right now in a wait and see phase because Bitcoin is struggling, actually staying above 40,000. Right now, it's also going down, so it's rather sideways movement and no strong bull signs what we have right now. The second thing I want to talk about is that the White House has defended the $1 trillion stimulus, and it has done it despite of that there are many criticism about this rising inflation rate and the low interest rates. So yeah, but still the White House is supporting it. So this is their policy. They're going, and more money printing, it's leading to even more and bigger inflation. And the third thing I want to talk about, that NFT volume has more than tripled, and even that we had this market crash, NFT volume is still doing well. So let's check out that as well. Guys, all this in today's video. Okay, so if you haven't subscribed to this YouTube channel, but you really want to get the freshest and crispiest cryptocurrency and blockchain news every weekday, then you should do it. Subscribe button, that's it. And then you're getting these notifications as soon as I put a new video on YouTube. Check out the links under the video, useful things. For instance, a free course, how to start to invest in Bitcoin and other cryptocurrencies. And now let's move on to the market, where we can see actually again a price up. Look, we're having again a red day. Bitcoin is down 8% in the last 24 hours. Again in this 35,000 range, 35,720 US dollar. Ethereum 2,476 US dollar, more than 10% down. When we're looking at the winners, then we have a few. Theta Fuel 18% up, Helium 13, Theta full, kind of that's it, no more. The rest of it, it's in red again because this uncertainty what we have on the market right now. And when we looking at here this Bitcoin chart, look, well, we can see that actually now we have these sideways movements. It's really struggling to going above 40,000, staying above 40,000, because it's here, as you can see, it's just touching it, but it was rejected again, and it was rejected here again, and now it's, look, this is the 4-hour chart, and we have like this red candles going down. You know, we had here this significant one when it went down to 30,000. Here we had last weekend. Look, it was very bearish. Now we were going up. We had higher highs here, higher lows, and that's broken again. And now it's coming back. So, guys, it's possible that it goes back again in this range, going down to 30,000. It can happen, or you know, where we see here support level. You know, it was here, as you can see here, we had this kind of ones here, and also all the way here. So this is around 30, there is a support level. But after that, I'm telling you, after that, we do not have too many. Look, when we go back, then here, maybe support level 20, 26-ish, kind of. Here, another one. 23, maybe this one is actually here bigger, and then basically it's at 19 around the next bigger support level. So anything can happen. If it cracks, you know, it breaks down, then it's all the way down that it can even go down to 90. So we have to be aware of that. Okay, this is definitely the short-term thing. In long term, it still can be bullish. It's nothing to do. It has nothing to do with that. Now it's just what's happening right now on the market. Okay, and now let's move on to the first news, which is all about this, basically. So here I brought you an article, and here you can see that the market enters in a wait and see phase as Bitcoin struggling below 40,000, as I just showed you. So data from Cointelegraph, Market Pro, and TradingView shows that while Bitcoin's price has managed to put in higher highs and higher lows over the past week, bullish continue to face stiff resistance at any meaningful attempt to break over 40,000. It's just happening. It's coming back, as you just can see it here, as the bears defend the psychologically important level. So from the bear side, it's always, it's a defendants here. Given that many traders are unsure of what might come next for Bitcoin price, it's wise to consider the various bullish and bearish scenarios. So we have to consider that what's coming. According to David Lifshitz, managing partner and chief investment officer at Exo Alpha, he's saying that the correction succeeded in drastically reducing the amount of leverage that prevailed in the ecosystem, which can be seen as a healthy development for the overall market, as it will help to build on a more stable base. So what we had seen, that people who used leverage and traded with that, they were hurt a lot. And actually, there were 1 million positions which were liquidated. We're talking about here about 8, 9, 10 billion US dollar. So actually, people were really, really hurt. And this was a shake-off. And it's not finished yet. It's really like cleaning the market. But whoever survives, the strong hands, they can just before again continue. But many of the people who entered the game recently have no experience, had big hopes to making tons of money in this bull market, and now they hurt and they panicking, and many of them sold their crypto, their Bitcoin, even on this kind of low levels. And so it definitely takes time for the market to, not this one. So as you can see it here, to recover, that's what I wanted to say. So here we go. Look, what they have now is going down, it's down, and now it's going sideways. So it's the big uncertainty. We need some confirmations here that actually we are willing to go back. For that, we have to reach this kind of 40,000, 42,000 level, stay above it, not always be rejected as we are right now. And then we can have some new hopes, basically. Okay, and now let's move on to the second news, which is all about that the White House has defended the $1 trillion stimulus. Okay, so let's move here. As you can see, on Wednesday, the White House defended President Joe Biden's $1 trillion spending proposal despite the criticism concerning rising inflation and low interest rates. Inflation has risen at unprecedented levels in the US, and the average American's purchasing power is growing less power. Now, critics like JP Morgan, Chase CEO Jamie Dimon, and American economist Larry Summers have blasted the Biden administration because they expect inflation to grow considerably higher. And now this is the danger zone where we have, because the economy have to somehow survive. The economy needs basically some money to keep going, because we are in difficult times. So they print more money. But if they do so, then the inflation, it's going higher and higher. Inflation has been worry for American citizens ever since the US government and Federal Reserve decided to increase the M1 monetary supply like never before in history. Essentially, inflation is the rise in price for goods and services, and the nation's currency ends up buying fewer goods and services. So definitely your money is worth less. Here are all these details, the numbers. If you wish, you can find it here on news.bitcoin.com. This article, I'm not going to read it, but I had it in the previous video when the numbers actually came out. So basically, Jamie Dimon is saying that if the money is wasted, it's not productively spent, we will have more inflation, less productivity, slower growth, and the American democracy, democracy, you will have lost even more credibility in the eye of the world. So they are playing actually a dangerous game, but I do know that they have not too much to do. They don't have too many opportunities. They have to make some money to make the economy and the whole thing survive. But with this, it's actually doing worse to it in long term. In short term, this is sometimes that, okay, let's save the day. But this is just like short term thinking. In long term thinking, inflation will be bad and it's getting worse and worse with more money printing. And this is the reason why, in my opinion, to keep your wealth in fiat is not worth it, because you're losing day by day. You have to look for other solutions, and this could be actually precious gold. It could be cryptocurrency, for instance, Bitcoin, and or some others, but of course not financial advice. You can think about some property opportunities, but definitely, as they say in crashes, cash is trash right now, because it's getting worse and worse, and all the news which coming out, they just making this stronger, this opinion, because it's no turning back. We are now downhill, and then I don't know when the whole bubble will actually pop, and then there's a real crisis coming. But they cannot do this forever. This is more than likely that something bad going to happen. Okay, let's talk about the next thing, and that one, it's all about that NFT volume has more than tripled. So even we have this market crash, NFTs are, the volume in NFTs is still hot. Here is this article, let me show you, where it shows that NFT volume has more than tripled even in price crash, as meme.com raises $5 million US. And the popularity of non-fungible tokens, or in other words, NFT, shows little sign of slowing down despite of the extraordinary market-wide crash that wiped from more than 1 trillion off the crypto market cap. According to the report by decentralized app marketplace DappRadar, the average number of NFT sales rose by 300% from 21,815 per day in January to 82,373 in May so far. This number rose even higher as crypto price started to plummet on May 12th, with sale surging to almost 94,000 NFT transaction a day. So as you can see, the numbers are getting crazy, and there is still great possibilities in NFTs. And of course, we do have this slowdown, but as you can see, now NFTs are holding itself quite well. Of course, not tremendously, whatever, but not bad at all. So these surging gas fees didn't deter NFT trades. However, with many turning to other marketplaces on alternate blockchains like the Atomic Market, on EOS.io blockchain, its daily transaction volume of 20,296 accounts is higher than any other NFT marketplace, excluding NBA Top Shot. And here you can see, look, there we have the Atomic Market, and look, now we have it here. This is back in January 2021, so this year, and then it goes all the way. And here, look, it's coming back now towards end of May. So it's crazy. Of course, we have other places like super rare. There are actually things going down, but some other places, the alternative ones like atomic market, it's going actually up. So yesterday, internet trend platform meme.com announced it had raised 5 million for a new market focusing specifically on meme, cryptocurrency, and NFTs. Ultimately, meme.com developers plan to create a coin market cap for mimetic content with charts and timelines where users can compare each meme and trend. The company Instagram account already has 7.2 million followers. The platform investors include, and here's the long list, Outlier Ventures, Digital Finance Group, Morningstar, Block Hype, Spark Digital Capital, CEO of mobile developer Altitude Games, Gabby Dizon, and Polygon co-founder Sandeep Nailball. So look, here's the website. I'm just going to show you. Here you can read what is this whole thing about. But the way they put it, imagine if Wikipedia and Dogecoin had a baby. So that's what meme.com is all about. They want to be really the coin market cap for meme tokens. So it could be interesting the way this whole NFT area is definitely something to explore. It has a lot of new possibilities. Many of them we cannot even see it yet. So interesting what's happening here. And yeah, just keep an eye on it. That's the only thing I'm saying. And yeah, guys, that's it for today. If you haven't subscribed to this YouTube channel, but you like this content, first of all, smash the like button, highly appreciated. Secondly, definitely subscribe, bell button all, and then you're getting the notifications as soon as I put on a new video. And I put these videos on YouTube every weekday to keep you up to date. And now I wish you a happy, great weekend. Have a good one, and then see you on Monday. Bye-bye.